This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, February 25th, 2015. Euro dollar. So this market is confined to a very tight consolidation over the past several sessions between 1265 and 1534. Clearly the market remains locked within a well-defined downtrend, but if we do see a break above 1534, this would open a deeper correction up towards the 50-day moving average at 1675, while back below 1265 would expose the 1098 11-year low from the 26th of January, below which opens the psychological barrier at 110. Sterling dollar. So cable continues to extend its correction within this downtrend, with the market now considering a break back above previous support at 50.45 and extending towards a measured move at 55.90. If we look at the previous consolidation that we had seen between 52.70 and 49.50, the break above 52.70 that we saw several days back opens that measured move in equal size towards 55.90. At that point, it would be reasonable to look for the bearish continuation and a medium-term lower top. Dollar yen. So not much going on with dollar yen. The market continues to be confined to a consolidation and trading right in the middle of that consolidation that we saw from the 7-year high at 21.85 from December and the 15.55 low from December 16th. A break on either end of these two ranges, on the range higher, range low, is going to be required for clear directional insight. But given that the market is locked within a more well-defined longer-term uptrend, it is favored to see an upside extension above 21.85 and towards 120 further up. In the interim, you want to pay attention to key recent resistance and support, which comes in at 120.46 and 118.22 above and below. Euro Swiss. So Euro Swiss has been consolidating over the past several sessions, but continues to show recovery prospects after breaking out from that recent historic low from that collapse that we saw several weeks back. With this in mind, there is risk for additional upside now towards the next key psychological barrier at 110, with only a break back below 104.15 to compromise the current recovery structure. Aussie dollar. So Aussie dollar has taken out some key resistance today at 78.76, and this could open a more significant correction in this market towards a measured move in the 81.25 area. Ultimately, the market remains locked within a well-defined downtrend, so if we do get up to 81.25, a lower top will be sought ahead of bearish resumption back below that multi-year low at 76.25. Dollar CAD. So dollar CAD has been consolidating over the past several sessions, several days, since breaking up to a fresh 5-year peak at 128. There is risk that this consolidation turns into a bit of a correction lower, with a break below 23.50 to potentially expose 119 further down. But ultimately, a higher low is sought out over the coming days, somewhere above around 119, in favor of the next major upside extension towards 130.65, which is the 2009 peak. Ultimately, only a close back below 119 would compromise the current recovery outlook. But for today, the key support at 123.50 is going to be in focus, with a break above or below, or the ability to sort of hold above this level critical in determining whether we're going to see a shallower higher low or a deeper higher low that takes us down towards the 119 area. Kiwi dollar. So Kiwi has been correcting over the past several sessions, since putting in multi-month lows at 71.76, and the market is clearly focused on a retest of that key previous support at 76.09. That was a previous yearly low from 2014. But any additional gains, given the intensity of the downtrend, should be limited to the 76 area, with a lower top sought out somewhere around the 76 area in favor of a bearish resumption. Ultimately, with this market, only back above the 80 level would compromise the bearish outlook. SPX 500. So the S&P 500 continues to extend gains to fresh record highs, with the market trading up towards the 120-118 area thus far, with no signs of any pullback. At this point, a break below 2083, the low from the 17th of February, would be required to take the immediate pressure off the top side, while inability to do so will keep the focus on additional gains towards the next key psychological barriers at 2150. Gold. So gold has been in a pullback over the past several days, basically since mid to late January, with the market trading from the 1308 area all the way back down to 1190 thus far. But again, given the recovery that we've seen out from the 2014 low from November, the market is favored. It does look like it could be carving out a more significant base, especially after breaking several weeks back above 1256. So look for this pullback to be a corrective pullback, with a higher low now now sought out around 1190, the low that we've seen this week, in favor of a bullish resumption back towards those recent highs at 1307, 1308, and then towards 1345 further up. Really only back below, or a close below 1190 now, would negate the recovery outlook for gold. That's all for now.